Hey, good morning, everybody. So, I just wanted to run through the dollar index really quickly for you guys because we've just had a very interesting development quite recently in the dollar index. We're going to start off with some more recent price action, and then I'll take you through a little bit of the further back history to help provide you with the context that I'm looking at when it comes to figuring out what is going on. So, this high, going back to going back to January 2017 is quite important, all right? And I'll explain why it's a little more important in just a second. So the high here is 103.82. And the high for the month of April is 103.92, all right? So that means we've marginally exceeded the prior high, and that changes things considerably. The reason it changes things considerably is because we can no longer count this decline in 5 waves. This was my prior count. Wave 1 up, wave 1 down, wave 2 up, wave 3 down, wave 4 up, wave 5 down, which meant that this could have been counted as a 3-wave move, which meant that this should have been the start of a new impulsive decline. That scenario now has to go out the window entirely. We can no longer take that view. So now the question is, well, what view can we take? Well, there are some alternate options here. All right. One alternative option would be that this is wave 1 up, this is wave 2 down, this is wave 3. This is this doesn't work either, does it? Because we're now in a Elliott rule violation. So we can't count this because wave 4 overlaps with wave 1. So now we would have to then come in with an alternate count for wave 3. Now I'm doing the sequence of these counts deliberately for a reason. So 1, 2, 3, 4, and 5. Right? It does look like wave 3 counts really nicely, and there's proportionality between waves 2 and 4. So the only way we could change this around would be if we had a slightly extended wave 3 here, we had wave 4 here, and wave 5 of 3 is in its late stages, all right? I don't like this count for one big reason. There's a very large difference in size and magnitude between wave 2 of 3 and wave 4 of 3, all right? So this doesn't look all that great to me. So, is there yet another alternative? Yes, there definitely is. And that alternative would see us count this move in 3 waves, right? So this would be ABC wave W for what is potentially an unfolding double zigzag, all right? So that would look something like this. And we're going to slap a wave W label over top of this, in which case we can put wave X here, and we'd be looking for a wave Y higher. Now, this is a really interesting development. First of all, because if I look at a typical relationship between waves X and waves Y, between waves W and waves Y, that would take us beyond a high here. And that, while not problematic on its own, suggests just immense dollar strength. All right, like that would be very, very curious to see what that would mean for the world in terms of the broader global macroeconomics and societal mood implications of a surging dollar. I mean, the last time we were here was in the early 2000s. So I think a high dollar to that extent would be scary for a few different reasons. Now, just because something's scary doesn't mean that it can't happen, right? Now, the reason I'm putting wave X here is because this looks like one wave. So this would be wave A down, wave B up, and then we'd have wave C here to complete the flat, all right? That's just if you're wondering why I have wave X in that position right there. So it's, we don't need to reach a point where wave Y is equal to wave W. We don't need to see that. But if we do see that, it starts begging the question of what does all this price action mean? And by all this, I mean everything within this gray box. How do we count that then? And the way we would count that would be if we had a larger complex correction. So check this out. What if it's A, B, C, and then we had A, B, C, and now we have A, B, C to complete a very complex looking sideways correction with two new price extremes. So the labels for this would be W, X, and Y. I mean, I kind of like this interpretation right now. This is probably what I'm leaning towards the most. The only other alternative would be if we had a triangle, a running triangle, A, B, C, D, and then E, and then something like this. All right, realistically, wave D would be a lot sharper. Either way, regardless of how you want to count it, whether you're going with my favorite interpretation that we're working a double three right now, a complex double three, or we're working with a larger multi-decade triangle, I think either way, there's one thing that I'm pretty confident of, which is we are going to see a higher and stronger dollar. That being said, there is one wrinkle here. Now, remember, we're looking at this on a monthly chart. What if, this is the last wrinkle, I promise. What if this complex sideways correction is not over yet? We can rule out a triangle because we've made a new extreme here, but what if this is wave A down, this advances in 3 waves for wave B of an expanded flat, and we're going to get a huge wave C lower first before we make another new high. That's another wrinkle. So there's a lot of different, whenever we're approaching multi-year tops, like we are here, we're going back to tops, going back to 2017, the market can take on many different interpretations at once. We call this a juncture. And I love junctures. I love junctures because you start off with a lot of possibilities, and then you start narrowing the field. You apply, by the process of elimination, you start applying your Elliott wave analysis to sort of narrow down the possibilities that the dollar could take. So it's very possible that we are dealing with a very mature 3-wave move, which is going to result in a massive relative devaluation of the dollar. All right. So it would be highly interesting to see something like that occur. From a practical standpoint now, how can we start eliminating some possibilities? Well, we have to wait for this current move to top out. All right. If I go to on daily chart, there's no evidence that this rally has finished. And moreover, if I just, I'm not really looking at the nitty gritty of the subwaves here, but if I just go 1 up, 2 down, and assume this is wave 3, I don't see a proportionate wave 4 that's proportionate anyway to this wave 2. So I think the next decline is still going to be ultimately corrective in nature on the short to intermediate term, and we're going to see one more high to complete wave 5. That would be my hunch right now. I don't see any evidence to suggest anything to the contrary at this time. But whenever we're approaching a juncture, and we're at a juncture right now, the key is to wait and be patient. Right now, I can't tell you which direction the dollar is going to go in the next 6 to 12 weeks. I just don't know that. What I do know is that we're approaching a juncture where the market has to tip its hand one way or the other. So if we start seeing 5-wave declines off this top, well, then we know that short term the trend is going to be bearish. If we see a very clear sideways movement or very clear 3-wave decline, well, now we can start looking for one move higher. All right. So until we get more price action to help clarify exactly where we're going in the short term, I'm going to leave the door open to all these multiple interpretations. And this is really the essence of what is, in my opinion, good trading and good forecasting. Good trading is not being super confident of a direction in the market all the time. Okay? Good trading is not always getting it right on the first try. It's about consistency and accuracy over time. I can't stress that point enough. It's about success over time. And if it was so easy to get a very obvious, clear-cut view on a market all the time, then everyone could do this. But not everyone can do this. In fact, most people can't do this successfully over a long period of time. So I have no problem sticking my neck out there to make bold calls, but it's a pretty binary outcome. I either look like a genius or I get it wrong like most other people do. So my personal preference is to lay out the possibilities. And as price action unfolds, start eliminating some of the possibilities until you're left with only one or two, right? So we're not there yet. We're still in the possibilities or unfolding stage. Hope this video was helpful. I'm deliberately trying to craft this video in a way that it spurs some conversation. At least that's my hope. So if you want to continue the conversation, let's just talk about it in the Discord. Thanks, everyone.